All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today is October 2nd, 2025. And our top story this morning is the job market. It is frozen, much like the housing market. Nothing seems to be moving in our job market. At least that's according to the Challenger job cuts report that came out today, which is kind of the best labor data that we have available to us because the whole government shutdown thing and we're not getting non-farm payrolls this week. So, hey, we got to go with the numbers we have. Our instrumentation sucks, but it's it. That's it. That's what we got. So Challenger job cuts came out this morning. This is pretty interesting. U.S. companies announcing their hiring plans. Now, this is a private institution that surveys this data. All right. Hiring plans were 117,000. That is down 71% year over year. Companies planning to hire people down by almost 3/4 versus where we were last year. So we've seen that in yesterday's ADP payrolls, right? Not negative job gains, downward revisions in the non-farm payrolls, at least back when we used to get those. Now the firing plans, that's another thing. And this is a theme we've seen for months now. We've been reporting on this with a lot of the initial and continuing jobless claims, back when we used to get those. Didn't get that today. Firing plans, 54,000 planned job cuts for the month of September. That is down 26% year over year. Still not as big of a drop as the hiring plans, but still a sizable drop versus last year. Companies are neither hiring nor firing. The market is frozen. And guys, that is exactly what is going on in the housing market. People are not buying homes. People are not selling homes. And whereas you've got in the labor market, the job market is frozen at what is, I think most people would not argue, very low wages. People are not making very much money, even if the nominal paychecks are up a little bit year over year. If you adjust for inflation over the last few years, earnings are at an all-time low. Incomes are at an all-time low, adjusted for inflation. And the opposite is true, though, in the housing market. It's frozen with very few transactions, but prices at an all-time high. Do you think these two things are unrelated? They're not. They're definitely related. It's the same freaking problem, guys. Nobody is going to work for a job that won't pay the rent. And so there are no transactions happening in the labor market because the price is wrong. Nobody will buy a house that the paycheck cannot afford the payments on. And so nobody is buying houses. Guys, this is the same freaking problem playing out in these two vital sectors of the economy. And what's causing it? This is the grand experiment in Keynesian economics is being laid bare. It is failing outright. You have got an endless cycle of currency debasement, financial repression, wage suppression has gotten to the point where the asset prices are so astronomically high, but the wages are so relatively low. So nothing is moving in the economy. Something's got to give here. Some asset prices have to come down or wages have to go way up. We've reached the point where it cannot possibly continue because nobody can afford what is being sold. Now, meanwhile, we've got Secretary Bessent is out on the press this morning, warning of a hit to gross domestic product, GDP, from the shutdown. I say good. GDP needs to take a hit from the government shutdown. The federal government or government spending is now 37.6% of GDP. More than a third of all economic activity in this country is the government. That is obscenely high. We need to take a hit to GDP. Oh my God, my economic growth, we're sent into a recession. It was fake all along. Case in point, the U.S. government running deficits at 6.3% of GDP, which means all of our economic growth is nothing more than debt and money printing. That's all it is. So good that we're taking a hit to GDP. Meanwhile, President Trump is out there touting opportunities to cut Democrat agencies and Democrat pet projects this morning over the government shutdown. Now, politically, what that is he is trying to put pressure on Democrats, saying everything you like is going to get cut if you don't come to the table and end this silly government shutdown. He's trying to get the Democrat base to put pressure on the Democratic Party to end the whatever it is. All right. We don't need to get into the why. But what is he cutting? He's threatening to cut a lot of what they called Green New Scam or Green New Deal funding. A lot of climate projects, $8 billion of climate projects in blue states is on the chopping block this morning. And again, I say good because it's fake GDP. And by the way, what the hell is the point of $8 billion in government funding for climate projects when we've got this story in Bloomberg about data center power costs? Data center demand accounted for 45% of all power supply cost at the recent PJM grid this summer, according to this article in Bloomberg. The PJM grid, that is the largest grid in the country. 1 in 5 Americans is on that grid, 67 million people, and they are literally seeing their power costs double for Sam and Jensen's circle jerk chatbots. So good that we're not spending $8 billion on climate funding. The people telling us to eat mealworms are burning all the fuel in the world to power their stupid chatbots that don't make money, by the way. Speaking of that, OpenAI hits a $500 billion valuation today. My grandma, what big not profits you have. And again, at a $500 billion valuation, what's that as a multiple of earnings? Oh, that's right. You get error, cannot divide by 0 because OpenAI doesn't have any earnings. OpenAI doesn't make money. Every product, every service OpenAI produces is at a loss. And Sam Altman says, oh, we're going to cure cancer. But first, we have to have our Sora video slop app. That's going to come out. AI bubble getting more and more ridiculous by the day. Now, we have some interesting developments in energy markets and oil in particular. Warren Buffett's Berkshire Hathaway is buying the petrochemical arm of Occidental Petroleum for $9.7 billion. Buffett is finally putting some of that cash to work. He's sitting on a huge record cash pile, so he's buying this. He's putting some of it to work. Is Buffett trying to call a bottom in oil here? I don't know if he's trying to call a bottom. Maybe he's starting to call a bottom, nibbling on the way down. But we also have another story about unsold oil starting to pile up in boats again. That's what happened in 2020 when oil prices went negative. I don't think we're anywhere near that level yet, but unsold oil sitting in boats can't be a good thing for an oversupplied market. President Trump plans to confront China over their lack of purchasing soybeans. I don't know what this confrontation is expected to yield, but China has not bought a single soybean from the United States this year, and that is causing pain for farmers. You know, I did that whole video about Chinese overcapacity and how the Chinese are shutting down mines and solar panels and electric vehicle makers and how the trade war is exacerbating this. But China does have points on the board. All right. This is not a one-way trade war here. We are inflicting a lot of pain on China's industrial capacity, but they are inflicting pain on America's agricultural capacity. And even though we export about 1/5 of what we import when it comes to China, it doesn't mean they still can't hurt us, and farmers are feeling it. South Korea is also in the trade war news today. The U.S. government is trying to cut a deal with South Korea. We're expected to announce this military partnership next week, but the hang-up on trade is this $350 billion investment that the South Koreans have made as part of this trade war dispute. The South Koreans, how do we put this? They have the money, but it's all the dollars they have. If South Korea were actually to invest their own dollars, not won, not some other currency, they would run out of Forex reserves and their own currency would collapse. And so the South Koreans are saying, we want a swap line from the U.S. Treasury in order to, like, real quick swap our won for dollars without crashing the Forex, the exchange rate. Looks like Treasury is hesitant to do that, even though we just gave a big swap line to Argentina to try to bail out Malay's government. Some interesting things there, and I suspect eventually it is going to settle on a swap line. That is important for U.S. shipbuilding. About $350 billion of investments. I think almost half of it has been dog-eared for investments in U.S. shipyards and ship production technology. So that is an important one to keep an eye on. We got a warning about deep fake political scams on Facebook. And of course, we've got more private equity funds than McDonald's in the United States now. That's fun as they try to park all that crap in our 401ks. Just as PIMCO warns of cracks forming in the debt market. Some cracks in the debt market that we spoke about yesterday with Lox Ganapathy from Unicus Research, who came on the channel to warn about what's happening in the auto sector. Check out that video in the feed just as soon as this live stream is done. Guys, we got a lot of stories to talk about this morning. How about we shrink my big melon of a head and let's see what's going on in the world of finance this morning. And as always, don't forget that like button for the YouTube algorithm. And you new guys, hit that subscribe button so you can come back tomorrow and have your coffee with the melon heads, because we do this every single day. And right now, the S&P 500 is higher by 19 points, or about 0.29%. We've got the Dow is just barely in negative territory, essentially unchanged here, negative 2.5 points. But the NASDAQ is leading the way higher, up almost 0.2% here, 158 points higher for the NASDAQ. Chip stocks had a great day yesterday. More AI round tripping and driving valuations in tech. Enjoy it while it lasts, guy. This bubble's days are numbered. Looking over at the DXY, we've got the U.S. dollars, again, pretty much unchanged here, 97.74. That is up or down, no points this morning, unchanged. And looking over at bonds here, we have got a lot of green in yields, not necessarily the whole yield curve, but yields are higher here. The 30-year Treasury, 4.720, that's up 0.5 point. The 10-year, meanwhile, 4.118, up 1 point. The 2 years at 3.565, that's up 2 points. And the 1 month is unchanged at 4.085. Not a lot of movement in asset prices this morning. That's interesting. We do have movement in metals once again, though. Check this one out. Spot shiny. We've got the gold at $38.90 for spot prices here. That's higher by 24 bucks, or 0.2%. That December front month gold contract is at $39.15. Guys, one thing I would note, you're looking at the arbitrage is starting to close here. That exchange for physical premium, the New York and London prices are coming into agreement. That's interesting. Keep an eye on that. Maybe it's time to have Bob back on the channel to talk about what's going on here, but I suspect we'll be hearing about backwardation in metals very soon. Meanwhile, we've got spot silver is at $47.88. Check this out. Overnight, we had $48 silver last night. Holy shnikes. We are rapidly approaching all-time highs here, guys. But for now, we're up 59 cents, or 1.25%, even as the December silver contract is at 47.84, up just 16 cents, or 1/3%. You can see how those two numbers are closing now with only 7 cents separating London and New York in the silver market. That was over or close to $1 just a few months ago on those tariff worries. Looking over at copper, we have got copper up 1.3% this morning. Platinum is up 1.75%. Palladium is up about 0.9%, and oil is lower by about 1%, 61.19 a barrel for November WTI futures. Bitcoin, meanwhile, having one heck of a run this morning. You know, we were talking yesterday about Bitcoin, guys. We were saying, watch that previous little high there on the way down. That was around 118,000. We blew through that number yesterday, currently sitting at $119,152 as priced on Coinbase. So maybe winter ain't here just yet. We've got one more shot at taking out the prior all-time highs, which was around 124,500. Still well shy of that, but heading in the right direction. You know, I went looking for what was causing this move in Bitcoin, and I found a couple of articles that were claiming Uptober. I guess that's what some of the crypto bros are saying. Everybody knows Bitcoin goes up in October. That's not true. Bitcoin does not always go up in October, but I guess historically it's had some good Octobers. So maybe that's what's happening. But I found this one in Barron's here. They're chalking up this move in Bitcoin basically to the labor data. Bitcoin jumps again. Coinbase and strategy stocks are getting a boost too. Bitcoin was rising again on Thursday, boosted by weak private sector jobs numbers that strengthened investors' confidence that the Federal Reserve will cut interest rates later this month. So I guess that's what's driving Bitcoin here. We had lousy ADP numbers earlier, yesterday, and people say, okay, job market sucks. Fed go burr, Bitcoin go up. That seems to be the simple explanation here for this move in Bitcoin. Either that or Uptober. You take what you want. I just throw them out there, guys. All right, let's talk about the soup du jour, though. This is the big story today. U.S. hiring plans and job cut announcements drop in Challenger report. This one just hit the tape a few hours ago. U.S. employers dialed back hiring plans in September and announced fewer job cuts, according to data from outplacement firm Challenger, Gray & Christmas. Companies last month announced plans to add 117,313 jobs. That is down 71% from a year earlier, and marking the weakest September for hiring intentions since 2011. By the way, that was a government shutdown in 2011 too, wasn't there? That was the first really big one. The report released Thursday noted a significant slowdown in seasonal hiring plans compared to years past. All right, it's looking like not such a good Christmas season here, at least not in the job market. From January through September, U.S.-based employers announced plans to add nearly 205,000 jobs. That is the weakest year-to-date stretch since 2009. Oh, good. 2009 was an awesome year, if you guys can recall. Meanwhile, firms announced plans last month to cut 54,064 jobs, down almost 26% from a year ago, and fewer than 85,979 announced in August. Planned cuts don't necessarily translate into immediate layoffs. The report shows a labor market in which there is both limited hiring and firing. Economists and policymakers will be relying more on private reports, such as the Challenger data, for clues about the labor market and broader economy in the absence of official data because the U.S. government is shut down. Yes, the official data, which sucks, by the way. The official data is just wildly error-prone and downward revisions into oblivion. But guys, the Challenger report, the ADP report, the market is going to be leaning more and more heavily on this private sector data because it's all we got. That's it. Now, if this shutdown lasts more than a month, I don't know what's going to happen, because that means a month without CPI, a month without non-farm payrolls, or possibly two CPIs, two non-farm payrolls. And then what? They reopen the government. All of a sudden, there's this big swing one way or another in markets. Who knows? Meanwhile, Treasury Secretary Bessent says U.S. GDP could take a hit from the shutdown. Look, guys, that's it. There's really nothing else in the story here. Like, okay, yeah, GDP is going to take a hit. And again, I said it in the opening, good. All right, too much of our GDP is government spending. Way too much of our GDP is government deficit spending. It is fake economic activity, much like the fake rally in asset prices being driven by this fake AI bubble that doesn't make money. It's been created by a hype cycle and accounting fraud. So much of it is fake. It's one reason why I'm constantly railing against these stories, guys. There is just no accuracy, no price discovery. It's all just making tomorrow's problems bigger in order to make today look a little bit better than it really is. It's irresponsible, grotesquely irresponsible. And I say good. We should be taking a hit to GDP. We need to. Just as the Trump administration cancels nearly $8 billion in climate funding to blue states, that's according to Vought. The Trump administration has canceled nearly $8 billion in funding for climate-related projects in primarily Democratic-controlled states, a top administration official said on Wednesday. Politically, this is Trump punishing the Democratic base for the Democratic shutdown to try to force the Democrats back to the table. That's what's going on here. The move came hours after the same official, Office of OMB Director Russell Vought, revealed that the Trump administration had frozen about $18 billion in federal funding to two major infrastructure projects in New York City. That's all right. The new mayor of New York, he'll fix that in a hurry. Nearly $8 billion in green new scam funding to fuel the left's climate agenda is being canceled, Vought wrote in a post on social media site X on the same day the federal government shut down after Congress did not pass a stopgap funding bill. So we're cutting $8 billion in climate funding just as we get stories like this in Bloomberg. Largest U.S. grid costs rose $7.3 billion due to data centers. The data center boom added $7.3 billion in power supply costs on the largest U.S. grid, raising bills for nearly a fifth of Americans from the Midwest to the Mid-Atlantic. During the last power auction held by grid operator PJM Interconnection this summer, data center demand accounted for 45% of total power supply costs, according to a report on Wednesday. PJM's independent market monitor also found that about 2/3 of the previous auction's record price tag was due to data centers, Across both auctions, data center consumption added $16.1 billion in costs. Soaring prices in the PJM capacity auctions have become one of the most direct ways to assess the electricity costs of the data farm build-out that's fueling artificial intelligence. More than 67 million Americans served by the 13 Eastern U.S. grid, the 13-state Eastern U.S. grid, stand to be affected by the trend. It turned PJM into a political lightning rod and prompted Pennsylvania Governor Josh Shapiro to say the state may leave the regional grid operator. Look, guys, every single one of us is now indirectly bankrolling this ridiculous capital destruction happening in the AI bubble because our power bills are going up because of it. Whether you're buying AI stocks or not, you're footing the bill for this. Let's just call it what it is, guys. It's bullshit. Meanwhile, we've got OpenAI valuation soars to $500 billion. Oh my. The charity is now worth $500 billion. I didn't know charity work was so lucrative. Good God, topping Elon Musk's SpaceX. OpenAI has completed a deal to help employees sell shares in the company at a $500 billion valuation, propelling the ChatGPT owner past Elon Musk's SpaceX to become the world's largest startup. The rapid rise underscores the investment frenzy surrounding the leaders of a technology with the potential to transform industries and economies. Sam Altman's OpenAI is one of several companies, including NVIDIA, now leading a global push to build data centers and develop artificial intelligence services, an undertaking that's expected to cost trillions of dollars, though it has yet to turn a profit. The U.S. startup is helping fuel that infrastructure boom by inking mega-sized deals with the likes of Oracle and SK Hynix. You know, guys, I couldn't help but notice this little part here, though it has yet to turn a profit. It's worth $500 billion. No profits. Well, that's good because it's a non-profit and they have no profits. So I guess they're just staying true to their charitable origins. Good God, what a mess. Meanwhile, we've got Apple shelves the Vision headset to this story cracks me up. Apple shelves the Vision headset revamp to prioritize Meta-like AI glasses. I'm not going to spend too much time on this one, guys, but look, Apple is canceling the Apple Vision Pro, a product nobody wanted or asked for, in order to give us Apple glasses, a product nobody wanted or asked for. So I don't know why they're really doubling down on this. The one thing I would note that was kind of ironic here, the company is working on two types of smart glasses. The first one, dubbed N50, will pair with an iPhone and lack its own display. Someone help me out. Some of you guys in the back, maybe. What's the point of smart glasses that don't have a display? Does that make these smart glasses that I'm wearing right now because they don't have a display? What does it do? I don't get it. It's like calling a window a TV. It's just a TV without a display. No, it's a window. It's just glass. All right, moving on. I told you I wouldn't spend too much time on it. It's a silly product. It's not going to make any money. Meanwhile, Berkshire Hathaway to buy Occidental's OxyChem for $9.7 billion in Buffett's biggest deal in 3 years. And the big story here is Buffett is finally putting his cash to work. This is pretty interesting. Warren Buffett's Berkshire Hathaway announced today it reached a deal to buy Occidental Petroleum's petrochemical unit OxyChem for $9.7 billion in cash. The deal marks Berkshire's largest since 2022 when it paid $11.6 billion for insurer Allegheny. It also comes at a time in which the conglomerate is sitting on $344 billion in cash, near a record for the company. Shares of Occidental rose 1.4% in pre-market trading following the announcement. Berkshire is already a major investor in Occidental, holding a 28.2% stake at the end of June. Buffett, who is 95 and stepping down as CEO at the end of the year, has said he wouldn't take complete control of the Houston-based oil company. OxyChem manufactures water treatment, healthcare, and other commercial chemicals. Occidental said it will use $6.5 billion of the proceeds to pay down debt. So it looks like Buffett's kind of calling a little bit of a bottom in oil, or maybe he's saying oil is going to go lower because oil is the feedstock for petrochemicals. So maybe he thinks margins will be expanding in this industry. But right as this hits, we got this story in Bloomberg. Unsold oil from the Middle East hints at early signs of a global glut. Unsold Middle Eastern crude cargoes from recently wrapped up trading cycles are pointing to early signs that an expected global oil surplus could be starting to emerge. The volume of unsold oil set to be loaded in November ranged from 6 million to 12 million barrels. Guys, that's important because that's about 6 to 10% of global daily consumption there. So there's a lot of oil being put on boats that's not being sold here. That's according to estimates from traders familiar with the matter, who, of course, asked not to be identified as they're not authorized to speak to the media. Sellers include the UAE and Qatar. As the monthly spot trading cycle ends, shipments are usually discounted to move them, and price-sensitive buyers in China and India are typical purchasers. However, there's no indication that these unsold cargoes have been snapped up yet, according to the traders. And look, I think what we're seeing here, guys, because they're mentioning price-sensitive buyers in China, that's that marginal demand. It's yet to materialize. Could this be China's overcapacity problem showing up in the oil market now, as these spot cargoes aren't getting bought and oil is starting to pile up? Meanwhile, Trump vows to confront China over the refusal to buy U.S. soybeans. U.S. farmers are the target of the Chinese in the trade war. This is not a one-sided fight, and the Chinese have been scoring points here. U.S. President Trump said he would confront Chinese President Xi Jinping over Beijing's refusal to purchase American soybeans, a growing area of tension between the world's two largest economies. Trump said he would meet Xi later this month at the upcoming Asia-Pacific Economic Cooperation Summit. The U.S. president has come under mounting pressure from Republican lawmakers from the agricultural heartland to break the impasse with China over soybean purchases, which has squeezed farmers. As the world's top soybean buyer, China wields enormous influence over global markets. Now it's reviving a familiar tactic of holding back on U.S. purchases, deployed during the first trade war under Trump as the two countries navigate a fragile truce. Data from the U.S. Department of Agriculture showed China hadn't booked a single cargo as of September 18th, weeks into the new marketing season, a first in records going back to 1999. Last year, the U.S. made up 1/5 of China's soybean imports, worth more than $12 billion, and accounting for more than half of total U.S. soy export value. So look, guys, there's kind of like shades of the Russian oil thing going on here. China, they're buying a lot of soybeans from Brazil and Argentina, not from the U.S. But look, soybean is a commodity. This is a global pool of liquidity. And so, all right, China's buying from Argentina and buying from Brazil. So the people who would typically have bought that Brazil and Argentina soybeans, where are they going to get their soybeans now? They're probably going to get it from us. Kind of like when Europe said, well, we're not going to buy Russian oil, and India said, okay, yoink, I'll take it. It's the same thing. So you're probably going to see the price that American farmers get for these soybeans might be pushed a bit lower here, but they're going to end up sold here. It's not like these soybeans are just going to rot, because people need to eat. Livestock needs to eat. It's still going to happen here. It's making a mess of the global order, which is what this trade war has done. It threw one giant cinder block into a very calm, flat pond. Now there's ripples bouncing around everywhere. More trade talks this morning. Seoul likely to unveil a security pact with the U.S. before the trade deal. I think they wanted to do both simultaneously, but there is a hang-up on the trade front. South Korea may move to unveil a new security agreement with the U.S. before concluding trade talks, as negotiations on economic issues drag on, according to the foreign ministry. Seoul is considering proceeding with the defense portion of discussions after coordinating with Washington. Given that trade talks are likely to take longer, Foreign Minister Cho Hyun told Yonhap News in an interview. The foreign ministry later confirmed his remarks to Bloomberg. 2 months after the trade agreement was reached, the talks remain stuck over South Korea's $350 billion investment pledge and proposals such as a currency swap. Cho said Washington is reviewing options, but noted the outlook was not particularly optimistic. Prime Minister Kim Min-suk warned in an interview with Bloomberg News last week that the absence of a currency swap with the U.S. would undermine financial stability, noting the proposed investment package is equivalent to more than 80% of South Korea's foreign reserves. In other words, South Korea doesn't have the dollars. They have the money. They can make the investment, but that money is in their own currency. And if South Korea were to take their own currency and buy dollars with it, it would collapse the value of their currency. And so they want a currency swap with the U.S. where they basically say, instead of selling our yuan for dollars, we'll just do this swap, which kind of like happens in this like dark pool, if you will, outside of Forex markets where it doesn't influence price. You give us dollars, we'll give you yuan. That's a currency swap. Well, it's not really a trade because the price, it doesn't affect the global price. Absent a currency swap, the only way South Korea could pay for this would be to use all of the dollars that they have left, which would leave them vulnerable, leave their own currency vulnerable to big swings in the exchange rate. Plus, everything South Korea imports, they have to pay with dollars. They wouldn't have money for imports, so they'd have to go into the Forex market and buy their currency. It would drive or buy dollars. It would drive their currency lower. So foreign exchange rate is really the big hang up on this investment. Now, this is important because a major part of this trade deal was around shipbuilding, which the U.S. military desperately needs heading into a naval conflict in the South China Sea. South Korea is the second biggest shipbuilder in the world, and a lot of this money was dog-eared for enhancements at U.S. shipyards. That is all on hold until this currency swap agreement gets made. Meanwhile, guys, just a heads up here. Watch out for the scammers that are out there. This one in MSN here, deep fake political scam ads surge on Meta platforms, Watchdog says. Meta remains just the most awful company in the world. Scammers are among the top political ad spenders on Meta platforms, using deep fake videos of American politicians, including President Trump, to promote fake government benefits, a Watchdog group said. The nonprofit Tech Transparency Project said it identified 63 scam advertisers that collectively spent $49 million on Facebook and Instagram, often targeting seniors with ads promoting fake stimulus checks, government spending cards, and healthcare payments. And I can't help but notice, number one, here's AI deepfake slop being used by scammers, but 63 advertisers spending $49 million. Now, keep in mind, a few years ago, if you even whispered the word ivermectin on Facebook, you would have been sent to Facebook jail. They would have booted your account. Or if you had suggested anything about any cause du jour that was in vogue to censor conservatives, Facebook would have, their algorithms instantly flagged that shit and they shut you down instantly. And yet, $49 million of scam political deepfake ads made it through Facebook's robust security features? Or maybe the company's turning a blind eye because they want the money and they don't care that seniors are being scammed on their platforms. Maybe that's why this is happening. Be careful, guys. There are so many freaking scammers out there. Meanwhile, we got to talk about this one in Bloomberg. Crazy, right? More PE funds than McDonald's signals pressure. And I saw this headline and I said, oh my freaking God, it's worse than I thought. We have more private equity funds than we have McDonald's franchises in the United States. Good God. What is going on in this market? Private market giants are pinning hopes of the next surge of growth will separate the best from the rest in an industry saturated by too many firms. There are 19,000 private equity funds in the United States, and there are 14,000 McDonald's in the U.S. How are there more private equity funds than McDonald's? That's actually crazy, right? KKR partner Alyssa Wood said Wednesday at Bloomberg's Women, Money, and Power event in London, capital coming back is really important. The mark-to-market paper gains only take you so far, saying, hey, the whole point is to make a profit, and you're not paying your partners any profits here. On paper, you're acting like you've made so much money, but until you actually give people money, they haven't made anything. That's kind of how that works. Its rival Blackstone is enthusiastic about data centers because this is where we shift into data centers and private equity. This gets great here. Because of an explosion in demand for computing, according to Kathleen McCarthy Baldwin. Okay, hyphenated names at the Women, Power, and Money Conference. She's the asset manager's global co-head of real estate. Her firm doesn't see a bubble in the sector, she said. Data centers are a great place to be positioned because you're not picking like which specific application within artificial intelligence is going to be the winner. You win when you see the digitization of our world playing out, whatever the hell that means, as we are all demanding more information, more compute, more content as well. Hyphenated McCarthy Baldwin also pointed to another promising sign for the industry, the prospect of retail investors rushing into alternative markets. Looser regulations are making it easier for Blackstone and its peers to expand beyond their traditional investor base to find new sources of capital that fuel investments. So we've got this person saying a thing about AI and data centers, saying, I don't see a bubble. And she's most optimistic about the fact that they're going to hide the debt that is fueling this bubble in your 401k. Nothing to see here. Move along. And as that's happening, we've got this one in CNBC. Corporate borrowers face funding trade-off as PIMCO flags debt market cracks. This one was pretty interesting here. PIMCO President Christian Stack is upbeat on asset-backed finance segment of the private credit market, but warns of cracks in corporate direct lending, which makes up the bulk of this sector. All right, cracks, that's not good, right? Asking for a friend, crack. You're optimistic, but there are cracks. It's like, oh, it's a great boat. Just cracks in the hull, but it's a good boat. There are problems in corporate private credit where borrowers are going to their lenders and saying, can I not pay you cash interest now, but basically borrow the interest from you and pay it later? It's called payment in kind or PIK, and it's fairly prevalent right now. Oh my God. All right, you already borrowed money, and now you're saying I can't pay you the interest. Can I borrow that? We'll call it payment in kind because that tested so well in focus groups. He referred to asset-based finance, though, as a much healthier credit environment. In asset-based financing, residential mortgages, consumer loans, student loans, and auto loans, the economy is strong. Households are strong, the consumer is strong, and we really aren't seeing cracks that way. Holy shit, he really said that. Guys, this guy just told you student loans and auto loans look strong. What's the percentage? Like 40% of student loan borrowers are delinquent right now, and that looks strong. And auto loans, go look at that video I did yesterday with Lux Ganapathy from Unicus Research. 30,000 cars from Tricolor's loans are missing. Why? Because the people who borrowed them, who were undocumented immigrants who didn't have credit scores, borrowed a bunch of money to buy the car and then drove it into Mexico. It's gone. Bye-bye. But he says, oh, don't worry, there's no cracks. We're strong in student loans and auto loans. Somebody actually said that. I got to love it. My God, has there ever been a market more fake, more propped up by absolute BS than this one that we are in right now? Oh, I'm almost out of breath from that. Hey, I just want to say thank you very much to Steve Woitis, who says, here's hoping precious metals and miners will go GameStop mode. You know, I don't want to see GameStop mode. I'd like to see something... I don't know, what's something famous that goes up low and slow forever? There isn't anything like that because nobody pays attention to the stuff that doesn't go vertical. It just ticks up over and over again, endlessly grinding along. That's what I'd like to see. When we see the vertical move, Steve, a big move vertical tends to be accompanied by a commensurate move down vertical, like we saw in GameStop and AMC and all of these silly meme stocks, like we saw with silver in 1980 and then again in 2011. I would like to see a slow, sustained rally that reflects the inherent value of the underlying commodity, the underlying monetary metals, not traders abusing market mechanics to cause short-term gains like we saw with GameStop and Open Door and everything else. I like to see it go up either way. I like the shiny. I keep my little America bar right here for just such an occasion. But thank you very much, Steve. I appreciate the super chat and the support of the channel. Thank you also to Nashville Pasta Man. SLV hits an all-time high at $49.95. 1980 inflation adjusted is $202.50. You know, I tell you, I was going to say, if you inflation adjust those old highs from 2011 or 80, silver has got a long way to go from here, even though we're coming up on that, 45-year 45-year resistance line. That being said, the SLV ETFs, Pasta Man, that may be one of the reasons why we're seeing the New York and London prices come into agreement and possibly go into backwardation. What's happening is the ETFs, as retail investors pile into the ETFs, they're adding shares to the ETFs, record amounts, according to Bob Coleman's Twitter feed, which I highly recommend at Profits Plus ID on Twitter. Those ETFs are buying the physical metal in London in order to offset the shares that they're creating. That's causing a shortage of bars in London. That's causing the London price to rise, coming back in line with the COMEX futures price, in other words, silver a month from now. And so if that price goes higher in London, now all of a sudden we're in backwardation, reflecting a severe shortage of physical metal in London, which would see the flow of metal reverse back across the Atlantic from New York to London, where it spent most of this year going from London to New York because everybody was worried about tariffs on silver. So keep an eye out for that. It looks like the metals, I don't know what that means for like overall prices long term, but it's fascinating to watch. Thank you very much, Pasta Man, for supporting the channel. T.A. Chapman says, "Welp, fake furloughed. Weird for the Protected Fair Labor Standards Act employees that are non-exempt. Happy to have a job. Cue the clown car music." T.A. Chapman, you mean you were a fake furlough government employee? Is that what I believe happened? Well, let's just hope it goes to a furlough for you, T.A. Chapman, and not an outright layoff. That's the one thing that looks different with this government shutdown, is they're not just going to furlough people and then give them back pay. Some people are going to get fired, like outright laid off. They're just going to cut the job. And the reason why is if these programs are not funded, then this is not money that has been allocated by Congress, who controls the power of the purse. And the courts have struck down most of the DOGE efforts and most of President Trump's cut to government spending, saying this was money allocated by Congress, so you can't just as an executive undo that. Well, since Congress didn't fund the government, that money is no longer allocated, which means President Trump is now unencumbered by these court decisions, and he can go ahead and fire the people. So probably going to be a lot of job cuts in the federal government. I wish you luck, T.A. Chapman, and thank you, sir, for supporting the channel. M&J, thank you so much, M&J, for gifting 50 Nobody Special Finance membership. Oh, my God, 50. Wow. M&J, that's a lot of memberships. Thank you so much. Hey, 50 new Melon Heads. Welcome to the channel. Be sure and say thank you to M&J. That was really nice of her. And a reminder, guys, that you get one free super chat every month as a Melon Head member, so feel free to use that, and I'll read and respond to your questions on the air. And while we are on the subject, M&J, thank you for everything you do for the channel as a mod as well. And Mish, thank you for everything you do as a for the channel as a mod. And I want to send a shout out to Nan, a.k.a. It's my other channel mod, who is unwell right now. Nan, I hope you feel better. We miss you. We hope to see you back soon. Get well soon, Nan. Thank you so much for everything you do for the channel as well. Thanks again, M&J. Clueless Panther says, NSF is my main source of relevant news nowadays. Keep up excellent work, Jack. Loved the vid you did with Lox, and I also like the shiny. I tell you, Lox Ganapathy, I am increasingly impressed by her research. Lox, she was way, way ahead of the auto finance issues that we're seeing right now. I've been having a lot of back channel conversations with Lox over the last couple of months. And I tell you, when I saw that tricolor story, it didn't surprise me because I knew what Lox was working on with auto ABS and auto finance. But I sent it to her because the double pledge collateral was new in the auto finance. And I sent that to her, and she responds back like basically, oh, yeah, everybody does that. And I remember saying, well, wait, what? Like fraud? Because double pledging collateral is fraud. Everybody does it? It's worse than I thought. And I thought it was really bad. So if it's worse than I think, that's not where you want to be. All right. That's not a good place to be on. So thank you so much, Clueless Panther. Guys, highly recommend that video that I did with Lox yesterday. Check it out down in the feed below this one. Thanks again, Clueless Panther, for supporting the channel. Nashville Pasta Man says, hey, do you think tricolor Nashville? You're going to put a bullseye on my head. That's interesting. It's funny you should mention that. 30,000 missing cars, according to that interview with Lux. If those cars end up on car lots in Mexico, and if those cars were, say, bought with, I don't know, cash down payments, or maybe loan officers were bribed with cash to make loans to people they wouldn't otherwise do, or maybe a Chinese CEO was given a lot of cash because Chinese organized crime tends to help launder money for the Mexican cartels. Okay. I see where we're going with that. Maybe some of that illicit drug money greases the wheels, and then those cars disappear into Mexico. Well, if those cars end up on Mexican car lots and they get sold, well, then that illicit cash has now safely entered the financial system, hasn't it? Funny you should mention that. Can't prove it, but it's funny you should mention that, Pasta. Yeah, interesting. Thanks again, Pasta, for supporting the channel. Mishra, hey, brother, she says, can you define backwardization? Thank you. Okay, yes, I can. Backwardization is when silver a month from now becomes less expensive than silver now. All right, typically when we're talking about futures, right? Emphasis future, there's a time element. You're buying, when you buy a COMEX futures contract, you're buying silver a month from now or silver 6 months from now. All right, now, typically there is a little bit of time element. It tends to be more expensive because, hey, maybe the price goes up. You're making levered bets. So you pay for that. And then as time goes by, we see those futures, they get less and less valuable until the day of delivery when they fall in line with the spot price. Now, backwardization is when the opposite happens. When there's shortages in the market, silver now becomes more expensive than silver a month from now because people are desperate for silver right now. They're willing to overpay for it. That's backwardization. And as we're watching that gap, that exchange for physical premium, the gap between the London price today and the New York price a month from now, as it gets closer and closer, as they level off, there's a chance that they could go the other way in the negative territory. That's backwardization. That's indicative of a shortage of physical metal in London. We have seen that before. It's rare, but it does happen. Thank you very much, Mish. That was a good question, sir. Armando Reyes says, you know what will burn up oil? A global conflict. You're absolutely right. And as a matter of fact, a lot of oil is burning up in a regional conflict between Ukraine and Russia right now. Russia has actually banned the export of diesel and gasoline because the Ukrainian drones are blowing up their fuel refineries. They've got plenty of oil, but they've got nothing to do with it because the refineries keep getting blown up and it's causing fuel shortages. So you're right. War is just destructive, outright destructive of capital, of wealth, of lives, of everything. Absolutely. That could drive oil prices higher. Absent that, oil's heading lower, though. I can tell you that, Armando. There's a lot of signs of a supply glut. Thank you very much, sir, for supporting the channel. Nacho Man says, did you see France boarded a ghost ship in international waters equals war? I did see that. France boarded one of the Russian shadow tankers yesterday. I don't know if it was in international waters or French waters. I don't know what's going on there. But you know what? A lot of wars start over boats, right? Remember the Maine, the Gulf of Tonkin, the Lusitania. I'm sure there was another one. What's another boat that caused a war? I don't know. But Operation Praying Mantis in the Persian Gulf and the U.S. Navy's proportionate response to when a U.S. destroyer hit a mine. Yeah, don't mess with the boats. That tends to not go over so well. And the French boarded a ship. I don't know the details of it, but I did hear that the French had boarded a Russian Shadow Fleet tanker yesterday as Europe tries to crack down on that Russian oil trade. Thanks, Nacho, for supporting the channel. Gordon Guanu says, silver all-time high, breach imminent. How do we celebrate? I don't know. Maybe we put something in the mug a little stronger than this here coffee to celebrate. Guys, the big question here, and I do want to celebrate. I'm so happy to see metal going up. It's long overdue. What happens at 50? I don't know. It's going to be hilarious. It's going to be fun to watch. Is it going to blow through 50 and go to 100 inflation-adjusted prices for 2011 and 1980? Way higher than $50. So maybe it just blows right through it. Maybe we hit resistance and we trade sideways for a little while. Maybe we do exactly the same thing we did in 2011 and 1980 and we go down. I know there's a lot of people out there who are like, I'm going to sell at 50 just in case. Maybe that becomes a self-fulfilling prophecy. I don't know. It's either going to go up, it's either going to go down, or it's going to stay the same. I think I covered all my bases there. I'm not trying to predict where the price is going to go, guys. All I can tell you, it's going to be freaking great to watch. Grab some popcorn, grab a beer, enjoy your $50 shiny because it's coming. Thank you, Gordon Guanu. M&J says, hi, M&J says, it's pronounced false book. LOL. That's interesting. I once met a guy who said that. Yeah. The Facebook scam ads, I can't help but shake my head. Do we really think Facebook is incapable of stopping that? Really? All right. I mean, think about how quick they crack down on political things that they don't like. It's almost like when they stand to make tens of millions of dollars, they let it slide. And if a couple of innocent senior citizens get scammed of their life savings, well, that's just a price Mark Zuckerberg is willing to pay. I mean, hey, why not? He's got the bookends of life there, right? Because Meta destroys the confidence and the little girls. It torments young girls and they do nothing about it. And now old people are getting scammed on their platform and they're doing nothing about it. So, hey, like they've got you covered at both ends of life. Maybe they just haven't figured out a way to ruin middle-aged Americans yet, but give them time. It's a very innovative company. They might come up with something. Thank you, M&J, for supporting the channel. Tom Dillon says, I invented a TV without a display. I called it AI TV. I like the way you think. I like the cut of your jib, Tom Dillon. Thought I'd make a mint. The patent office told me, no way, we already have the radio. Then they called me a mean name. What a bunch of jerks. Yeah, I once considered radio. Somebody once told me I had a real face for radio. I'm not sure what they meant by that, but maybe I should consider that. Yeah. What the hell are smart glasses without a display? They're just glasses. But they have a camera in them, but the camera doesn't do anything. The camera talks to your phone. Oh, another camera for your phone. Now Apple's really innovating. Oh, that's right. That's all Apple has done for the last 10 years, isn't it? I don't know, but the Apple Vision Pro, I just remember when everybody laughs at you when the price of your product is unveiled at your big WWDC event, not a good indicator. The Vision Pro was dead before it got off the ground. Thank you very much, Tom Dillon, for supporting the channel. Ryan Morrissey became a new YouTube member. Ryan, welcome to the Melonhead, sir, and thank you so much for supporting the channel. Feel free to use that super chat function, and I will read and respond to your questions as always. Thanks again, Ryan. And hey, while we're thanking Ryan for becoming a Melonhead, I'm just going to say thank you to all you other magnanimous Melonheads who are out there supporting the channel. Thank you guys so much for the generosity. Thank you also for all the super chats. Wait, shoot, stop the music. Dag nabbit, I'm premature. I blew it. God damn, Chris Farley show, you idiot. Sorry, Ryan. And sorry, Armando. I almost missed you there. That one came up. Oh, man, I totally ruined the sign-off. When will you and Locks come together and predict the next crisis like Burry? You can do it. I believe in you. I already did predict the next crisis. All right. The next crisis is the AI bubble, and it is going to pop, and it is going to pop soon. Locks and I do confer notes on that. I was like Burry. I was early. I was 2 years early on that. All right. And honestly, I wasn't wrong about it. I've been right the whole time. It's just I underestimated how gullible people are and how high they'll bid up these stocks based on what was so obvious to me 2 years ago was an elaborate accounting fraud combined with a hype cycle that was concocted by Wall Street and Silicon Valley in order to stop the brutal tech sell-off of 2022. It is so obvious that's what this AI bubble is. And I cannot believe it has risen to trillions, tens of trillions of dollars in market cap. The history books will write volumes about how stupid we have been. And I just want to send a shout out to all these AI bros who think they're so much smarter than everybody, who have been trolling me in the comments. History will mock you. Congratulations, a-holes. Yeah. Thank you very much again, Armando, for supporting the channel. Now we do the sign off. Thank you so much for the super chats. Thank you so much to all my magnanimous Melonheads on YouTube and Patreon. You guys rock. Links down below in this. If you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.